Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Wednesday, September 23rd, 2009. Well, the markets are basically on the flat line today after a big dip early in the morning, right around that 10:30 time frame when oil inventories were released. This was the real kicker today, folks. You got a major downdraft on oil right around those inventory numbers as they came in with a bigger build than expected in oil inventories. So you basically had more build. That means it's bearish for prices. Prices did collapse. I want to show you the chart here on the USO quickly. Then we'll get back into the technicals. Look at that fall. I mean, obviously you had some people knowing about the inventory build earlier on, and that's why oil started to fall here. But look at this drop on oil inventories. This candle was that drop. That's a major drop, and oil has really started to just go sideways the afternoon session, even though the markets have rebounded back. Now, the markets did get punished on that drop in oil as they came down on the back of ExxonMobil. ExxonMobil came down extremely hard there, all the way back down, basically going negative and going down as much as 75, 65 cents, ultimately starting to rebound, though. While oil stayed lower, ExxonMobil started to tick back up. And you can see this is the chart of ExxonMobil on the intraday, and look at this. Here's your drop on inventories, bounced, double bottom, beautiful break of the double bottom, and then bounce, and then the market just started to take off on Exxon to the upside. And that really helped the markets regain their composure. Until that point, you had a major drop on the markets, a nice little, probably about 40, 50 point drop on the Dow, and that all was basically taken care of and recovered as the markets are trading basically flat to slightly higher. The Dow's up 15 points, NASDAQ up 5, and S&P up 1 point on the day. So basically 1/10 to 0.2% on the markets to the upside. And again, that's mostly a result of ExxonMobil. Exxon was the catalyst that caused the sell here, as it's a major component of the S&P and such, and the Dow. And you can see that sell right there, then the bounce back, and then as you came back up, that gave the markets a knife of a bid to get back to the positive side, or flat side, if you will. All right, let's go back to the SPY. So we know oil took a major hit today. I was bearish in last night's video. That's the only commodity, or not the only commodity, but it was the only play out of the dollar, gold, and oil to really be majorly bearish on yesterday in the video. And sure enough, you can see the fall down $3 on spot crude, nailing that call. But bottom line is this. What you're seeing is the market that's trading right around 107, above 107, below 107. I want to point this out to you. Check this out. See, we opened here right up near this green trend line. Notice how the green trend line matches yesterday's highs of the day. You know that's going to be resistance. This green trend line was actually resistance even going back further than yesterday. I had this line on literally for weeks and weeks. You could have seen it yesterday in yesterday's video. Well, guess what? It comes into play today at the highs here and the highs right over here again, putting pressure on this market. Now, on the downside, we talked about 107. 107 even number on the SPY was a major support level. And look at what happens. Yesterday it hits once, twice, 3 times, 4 times into the close. Today it gaps up, comes down, hits it again, bounces 5 times, and then finally on that oil sell it breaks. However, you're looking at 107 as more of a closing angled basis. All right, what I mean by that is depending on which side we close is which way you favor the market the next day. And right now, as of yesterday, we closed above it. Therefore, the market should technically be above 107 still. And sure enough, look at that. They reverted back up because you did not close below 107 and back right up here above 107 on the SPY. So that's number one. Next, what I want to point out is the symmetry of this market. If you take the high print today at 107.33, all right, so 107.33, folks. Remember that number. You have 33 cents above 107. If you take that amount of ability or amount of data or price above the 107 level, that's 33 cents above 107. If you reverse that on the breakdown, guess how low we went? We went 32 cents below the 107 level. So my point is this, 33 cents above, 32 cents below. Notice that symmetry. You're almost following on either side of this 107 level perfectly. Literally within a penny of how much you were above it, you were below it, and then you bounce back the opposite way. Very, very fascinating to watch this kind of thing portray itself. And that's really what I wanted to point out there is the symmetry of the markets and how key this 107 level is. This 107 is an unbelievably important level here on the intraday 10-minute, the 60-minute, even on the daily to some extent, although the daily has a couple other levels that I can't really go into because that's for our premium guys. But you have to look at that and find it fascinating that it's so amazing to see the market uptick above that 107 level, 33 cents, and then 32 cents on the downside. Almost perfect there in that regard. All right. Now, what you can see here is after the dump on oil, I mentioned this perfectly. We had another trend line right here. Now, this trend line had been in the charts for actually a couple days, if not more, maybe as much as 1 or 2 weeks. And this was on your charts. If you look back at yesterday's video, you will see this line yesterday. If you look back the day before, you will see it the day before. That's how key this line is in the markets. Now, why is it so important? Well, if you go back multiple days, you can see that if you go back to last Friday, the closing level right here on Friday, this is Friday's action right up here, it was right at that level. Then if you go to Monday, where high was right there. So you had gap fill perfectly. That was a great resistance call. We called that in the chat room for a beautiful scalp to the downside. In addition, if you go to yesterday, we fell down, pierced all the way down here, bounced, pierced it again, never closed below this level, and bounced up. Guess where we go today? Right down to that same level. So you have to know your levels. There is so much money to be made here, folks. Our guys in the chat room obviously follow our key levels, but so much money to be made based on these levels that we show you in these videos. And these videos are the free ones. Just imagine what you're getting in the Research Center 30 to 40 minute nightly videos. But bottom line is, you can see the 106.70 level right here. That's the key level we were watching on the downside. That got tagged right here, then started to rally back up. You can see how he just went right back up. Look at the volume decline ahead of the Federal Reserve today, and that's the next thing I'm going to discuss. But the market just floated right back up, right back to a double top here. Resistance is green line, middle support is 107, bottom support is 106.70. Those are your levels. You got to know these levels, guys. These are major. You can see really for the last 2 days, you've just been chopping on either side of 107 from this level to this level. Back and forth, back and forth. That's the way things are going. What you're really looking for here is a major establishment of a break below and close below 107, and then off of that, you could see more downside in our opinion. All right, but bottom line is the market has gone to sleep here. The market's been able to float back higher on the back of extremely, and I repeat, extremely light volume. Why? Because the Federal Reserve will release their FOMC policy statement today at 2:15, and really since Monday, believe it or not, Monday the markets were asleep. Tuesday the markets were asleep volume-wise. We were actually just doing a little bit more volume than the lightest volume days of the year, but those 2 days, including today, up until 2:15, will be extremely light volume due to that FOMC policy statement. Now the markets are ticking up right into this green trend line here. There's no volume behind it, but it could be a little bit of a near-term breakout. We'll watch, but remember, as long as you're above 107 on a closing basis, you continue to favor the upside. Just that simple, folks. If you can close below 107, then you can start to favor the downside in the day following and continue to do that. All right, that's where this 107 level is. That's how important it is. And right now, you're starting to break up a little bit. I don't necessarily know if this is going to be a major breakup yet. We'll have to see at the end of this candle if it closes above this green trend line and if we confirm it. But remember, there's just not a lot of volume behind this. The markets continue to be in that sleepy motion until we get the word from the Federal Reserve on where their policy statement is going to take us. Now, it's not so much of a level of are they going to raise rates, lower rates, what are they going to do? Rates are basically zero right now. No one thinks they're going to raise rates. That's not going to happen. The key is going to be whether or not this market gets a statement from the Fed that tells us something others. For instance, this market, we're going to tighten the money supply. We're going to start to do these repos, kind of rebuy debt and so forth, and bring back the money supply a little bit. Those are keys that we need to listen for in their statement and could really affect the markets. Remember, you tighten money supply, you can tighten credit. That's not necessarily what the Fed wants to do. So I'm almost leaning towards the fact that they may not say that this meeting. They're going to be very careful. The Federal Reserve understands what's going on in the markets. They understand that everything they say is taken very, very seriously, and they will be on their best behavior in this statement, in my opinion, which, again, does that mean it bodes well for the upside? Well, it may. We're going to have to see. The one thing I can say is all you have to look for is the technicals on this chart. Which way on the 107 level are we going to close today? Are we going to sell off on the Fed and close below 107? If that happens, look for more downside tomorrow. If you close above 107, then you look for more upside with a possible target of 108.05 on the SPY. 108.05 would be our next major target on the SPY on the upside. All right. One thing again, folks, please note you do have a possible mini breakout here. Now, it doesn't mean a whole lot ahead of the Fed, but it's just one more signal that we were dead on this 107 level as being a close above. You favor the upside. That's simple, folks. Continue to watch oil this afternoon. Continue to watch the dollar. The dollar is slightly stronger today, and we'll continue to see where this thing plays out. 2:15 p.m. Eastern Time is the key level. We'll talk to you soon, folks. Have a wonderful evening and afternoon, and we'll see you tomorrow. Take care.